Hey, what's going on YouTube? I'm joined again by Jake Lambro from Calibro Home Loans here with us. Jake works all over the PNW. He's moving into California and Arizona doing home loans. He is a first-time home buyer specialist and down payment assistance specialist. So we're super excited to have you on, Jake, to talk about the 1% loan.
Yeah, happy to be here again. Thank you.
Great. Yeah. So just tell us about this loan. What is it and why are they doing it?
Yeah, so Luther Burbank, a small bank, I believe based out of Washington, also in California, is offering a brokered out program through Caliber. So Caliber is exclusively allowed to offer it. It's a 1% down program, which is the lowest conventional down payment that I've ever seen on a loan product. And it has a couple pretty cool things with it as well.
Okay, gotcha. And obviously, something like this might have a long list of pre-qualification standards, but I really want to talk with you about what is this for and like what are the benefits and what's the cost. So, who is this program designed for?
Yeah, it's designed for those who are well qualified in all aspects besides down payment. Those who have good credit, good employment history, the ability to borrow, but are a little bit lacking as far as how much down payment funds they have for a home.
Okay, so the ideal candidate basically has great income, they have a solid credit score and solid credit history, but they just don't necessarily have all the money or maybe don't even want to put all the money, right?
Yeah, that's the other thing too. If they have their money locked up in some good investments, or even other houses or whatever it may be, if you just want to put 1% down on a home, then this is the option for you.
Great. So it's just an opportunity to get into a home for a cheaper upfront cost.
Exactly.
Okay, great. And so who would you say this program necessarily isn't for? Who would need to wait a little bit before this would be a good option for them?
Yeah, so it's not for those who are lacking in credit history or don't have 2 years employment. Um, any of those people that are thinking this is a program for those who are a little bit less qualified. That's not the case. It is really just for those people who, yes, they are well qualified, but don't necessarily have or want to put the down payment down.
Okay, good. Are there any other benefits besides just being able to put a low down payment?
Yeah, so anything, as we've discussed previously, with anything under 20% down, there's mortgage insurance.
Mhm.
With this program, from the get-go, there's no mortgage insurance and there's no mortgage insurance that comes later. So it's a program completely free of mortgage insurance. And the other beauty of the program is you get 2% forgiveness after you've lived in the place for 3 years. So what that means is they come and check, knock, knock, make sure that you're still in the house after 3 years. And if you are, they will take 2% of the purchase price off of your loan amount. No questions asked.
That's awesome.
Yeah,
Does that reduce
super,
the
super
length of
nice.
the loan or your monthly payment will go down?
Yeah, so your monthly payment will go down. The amortization is still over that 30-year period,
Mhm.
but your monthly payment will go down by whatever that number might be.
That's awesome. And are the
Yeah.
rates much different on this loan?
So the rates are factored about the same as what they currently are. So right now we're seeing mid to high threes with that program. We're also seeing mid to high threes. As rates go up and down, they'll also go down. They're not based on the same rate sheet as we currently have,
Mhm.
but they're very parallel, and the rates are really not that much
They're
different
really
whatsoever.
similar.
Yeah, exactly.
Okay, good. It sounds like there's a lot of benefit to this program.
Mhm.
What are the risks and costs associated?
Yeah, so not really anything hidden as far as costs. It really is the 1% down. You know, you're still going to have your typical closing costs and all of your escrow fees that you have to pay, which are standard to any real estate transaction. So those are all going to be the same. No real risk either, other than the fact that you're only going to have 1% equity in your property, which isn't necessarily a risk. But, you know, let's say you do end up wanting to flip the property for a profit with only having 1% equity in it. Obviously, there's not that much room
Mhm.
for equity per se. But you know, it is for people that don't have or don't want to put down payment in, that want to get into a home that is going to be their primary residence.
Gotcha. And in this market where we're experiencing 10% appreciation in Seattle or more, it sounds like this is there's a lot of benefit to using this program, and there's not much that can be lost.
Totally. No, not at all. You get into it 1% down, and then 2 years later, at that 10% equity margin that you're talking about, you're seeing 21% equity. After 3 years, you're seeing 31%. You get the 2% forgiveness. You're at, I don't know, let's say 33% at that point. And then if you want to turn that into an investment property, or if you want to sell the home, then you're looking at some real returns.
Oh, absolutely. That's awesome. And do you
Yeah.
see this loan program as something to get your foot in the door that you would want to refinance out of later, or is this pretty viable to hold for the entire loan period?
Yeah, interest rates are still at historic lows. They've crept up this year a bit, but being able to get your foot in the door with the 1% down, it's still a conventional loan. You still have a low interest rate. You don't have mortgage insurance. There's no reason to refinance out of this loan. If later down the line in a few years, interest rates see the ones or the twos, shoot, maybe you refinance. But as it stands now, it's definitely a loan you can see having for the full 30-year term.
That's great. That's awesome.
Yeah.
And Jake, for our older crowd who experienced the 2006, the 2008, and 2012 housing crisis, do you see this showing any signs or hints of that, or why is it different?
No, not at all. These are still fully underwritten loans where we have to look at W-2s, pay stubs. We still look at bank statements, even though you're just putting 1% down. We're still doing our due diligence on the front end to make sure we're not lending out to people that can't afford a home or are going to default on the loan. This is not for somebody that plans on defaulting for a loan, nor is any loan product that we have. And the 2008 crisis was strictly based on people that were getting loans that couldn't really afford loans. So we have plenty of tight regulations in place to make sure that that never happens again.
Okay, gotcha. So contrary to when people were overextending and it was really loose lending standards back in the 2006 and 2008, this is a pretty strict, you would say, it has strict lending standards and underwriting to make sure that it's a safe investment for the company.
Totally. Yeah, no, we are not going to lend to anybody that can't afford to be lent to.
Okay, great. Is there anything else before we dive into kind of the nitty-gritty of how to get approved? Is there anything else we should know about this program?
Not specifically. Just want to reiterate, it's definitely not for those people that are not qualified for a regular conventional loan. They then move to this. It's still, there's tight regulations. Not everybody qualifies for it. But for those who do, it's a really, really awesome option for them.
Gotcha. Would you say that this has stricter lending standards than a conventional loan?
Slightly. So with conventional, you need a 620 credit score or higher. With this, you need a 645 or higher, which by no means is an incredible credit score, but there is that, barrier to entry, I guess is the best way to put it. And then the other one, the big one, is you have to have 3 trade lines open for the last year. So whether that be student loan, car loan, boat loan, credit cards, you have to have 1 year history on 3 credit lines.
Okay, got it. So what does someone need to get qualified for the 1% loan? What are the basics besides the credit score and the trade lines?
Yeah, so then just standard practice, right? You need 2 years employment history, and then your debt to income ratio on this one. I know previously we talked about debt to income ratio can't exceed 50%. On this one, it is 0.45%. So almost 50, not quite. So basically, to do that calculation, you take your income, subtract your debts, and instead of dividing that number by 2, you multiply it by 0.45. And then that is the max house payment you can have per month. And then you multiply that number by the 170, like we talked about previously. And that will get you how much loan you can afford.
Gotcha. And what states is this available in again?
So this is just King, Pierce, and Snohomish County in Washington. And then there's a few other counties in California. I know Santa Clara County is one of them. And the only reason I remember that is because that is where I went to college. And then there's a few other in California. I don't know them off the top of my head, though.
Okay. Yeah, no worries. We can always just throw that in the description below. What is the loan limit on this 1% loan?
Yeah. So on this specific product, the loan limit is 647,200. So about 647,000 is the limit.
And is this single family only?
Single family home, primary only. Correct.
Okay, so it's got to be a primary single family. And then hypothetically, we talk a lot about house hacking on this channel. Hypothetically, you could live there and rent out your rooms. You just can't buy a multifamily. Is that correct?
Correct. Yeah, yeah. If somebody does this and buys a 3-bedroom home and wants to rent out the other 2 rooms to friends, that's not anything that us as lenders will necessarily look at. It doesn't need to be brought up along the process. That is just something that can kind of be done on the side on your guys' end as the buyer. But no regulations saying you can't do that.
Okay, good. And Jake, we've talked in other videos about down payment assistance, and you're a down payment assistance specialist and you work a lot with that. Can this be combined? Even though it's just 1% down, can they be combined or are they separate?
No, it's separate. You do on this program, you do have to put the 1% down. The down payment assistance is a separate program with 0% down, which is a great program, but interest rates are higher. It's a loan that is from the Washington State Housing and Financing Committee. So they set the lending standards as well as the rate. So, whether you go through Caliber or Chase Bank or Bank of America or wherever you go, it's all going to be the same because it's through that government program. But with this one, it's exclusive to Caliber and the rates are more closely related to those of just standard conventional loans.
Gotcha. So with this, you don't get to use down payment assistance, but what you do get is that it is very similar to a conventional loan because you have a low rate and you get to
correct
a low down payment.
Yeah, and it actually is considered a conventional conforming loan. So
okay.
Not that necessarily matters, but to those that prefer being in conventional loan, be a little bit more comfortable doing that, it is considered a conventional loan.
Yeah, and honestly, Jake, it's really interesting that you don't have to pay mortgage insurance on this. I feel like
super weird. Yeah.
Yeah, like for me, if I'm gonna go buy a house with a conventional loan, I might as well do the 1% because it's avoiding the mortgage insurance.
Right. It's just going to be a cheaper monthly payment. It's just going to be, even for those people that can't afford to put 3% down, you might as well just put the 1% down and avoid the mortgage insurance. There's no reason not to.
That's
as long
as
you
like.
meet the other as long as you meet the other criteria to be fit into the loan, then definitely a no-brainer to use.
And do you see this loan program being offered for a very long time? What's the status on that?
No, so it's through Luther Burbank, as I said, and they're using their own portfolio, which means they're not government backing it. So it's basically their own cash that they're lending out. Obviously, they don't have the deepest pockets in the world, just being kind of a localized bank. So this is going to be a limited program that's not there forever. It's kind of a first come, first served basis.
Gotcha. So limited time only. Call now to apply.
Yeah, exactly.
How can we get started with this loan?
Yeah, shoot me a call. I'm sure you'll put my information in the description below. Yeah, shoot me a call, shoot me an email, text me, DM me, whatever you want to do. Say that you're interested in the 1% down program. I will give you a little flyer with more information about it. We can set up a call so I can answer any of your questions. Anything you need, I'm here to help and here to answer any questions you got.
Great. That's awesome. Well, you heard it here, 1% loans with Jake from Caliber Home Loans. Jake's a great guy. We've done a bunch of deals together. He is great at advising you through the financing process and just getting prepared to buy a house. So even if you're not close to these lending standards for the 1%, well, Jake, you and I know that a lot of people are actually closer than they think sometimes. And it just takes the conversation with the lender to find that out, right?
Totally. Yeah. A lot of people don't realize how close that they are. And even for those that are not close, just starting the conversation to get on the right path to get close is super important. So whether you think you're ready tomorrow or not ready for 2 years, shoot me a call. I'm happy to tell you how close you are and how to get you where you need to be.
Perfect. That's awesome. That just about answers our questions. Is there anything else you'd like to say about the loan or anything else?
I don't think so. Like I said, first come, first serve. It's not going to be here forever. So if you do have questions about it and are hesitant to reach out, please don't be. I'm happy to help anytime.
All right, perfect. Again, we'll have Jake's information below so you can call him up, let him know that you'd like to work with us to get on the 1% track and get you into a home here in Washington.
Awesome. Thank you.
Thanks so much, Jake.